Welcome to The Explainer. Today, we're cracking open the 2026 playbooks of three of the biggest investors on the planet. And let me tell you, their latest moves reveal strategies so different, they're practically at war over where the market is headed. Let's get into it.
You know, the end of 2025 wasn't just the close of a quarter, it really felt like a massive shakeup in the world of investing. The latest filings from these three titans show they're not just on different pages, they're in completely different books, betting against each other. So that leaves us with a big question. Who's actually got the right playbook for 2026?
All right, let's kick things off with a true changing of the guard over at Berkshire Hathaway. After an incredible 60 years at the helm, Warren Buffett is handing the CEO reins to Greg Abel. So, what was the Oracle of Omaha's final big move?
Now, at first glance, this looks like classic Berkshire, right? A portfolio you could build a house on, full of household names. But here's the thing, the real story isn't what you see on the surface. It's in the small but super important changes he's been making. The foundation is still there, but the furniture is definitely being moved around.
And this is where it gets really interesting. Berkshire made a pretty bold, almost contrarian move, dropping over $350 million on the New York Times. That's a huge bet on the value of trusted media. And at the exact same time, they started tapping the brakes on big tech, slashing their Amazon stake by a whopping 77% and even skimming a little profit from their crown jewel, Apple.
This is pure 100% Buffett. He's basically signaling that he thinks the tech party might be getting a little too wild, and he's quietly moving his chips over to assets he sees as undervalued. It's a classic defensive play, setting Berkshire up for stability in what could be a pretty rocky year.
Okay, now let's completely switch gears and jump to the other side of the investing universe with George Soros. If Buffett's moves were a quiet game of chess, Soros's were more like a high-speed, high-stakes poker game, and man, he just reshuffled the entire deck.
So you look at his top holdings, and yes, some names are familiar. Amazon and Alphabet are still up there. But that's where any similarity just stops. This portfolio went through a total transformation, a complete overhaul that points to a radical new direction.
Soros is making a massive all-in bet on the AI revolution. He's pumping up his positions in the companies that are basically the engine room for AI: Microsoft, Taiwan Semi, and NVIDIA. At the same time, he's beating a major retreat from global risk, completely bailing on his China positions and dumping financial heavyweights like KKR and Goldman Sachs.
But this is the move that really shows you his whole strategy. It's not just about picking winners. He's backing up all those huge tech bets with an enormous $580 million wager against the energy sector. This isn't just a hedge, it's a massive insurance policy.
So the big takeaway here is that Soros is bracing for a bumpy ride. He's making these incredibly aggressive, bullish bets on the future of AI, while at the same time building a fortress to protect his portfolio in case other parts of the market totally fall apart. It's a masterclass in playing offense and defense at the same time.
And finally, we've got Ray Dalio's Bridgewater, which gives us a third, completely different way of looking at things. While Buffett and Soros are down in the trenches picking individual stocks, Dalio's looking at the whole battlefield from 30,000 feet.
I mean, this slide basically tells you Dalio's entire philosophy. Look at this. His top two holdings aren't even companies. They're SPY and IVV, two gigantic ETFs that just track the whole S&P 500. This isn't just an investment, it's a huge vote of confidence in the strength of the entire US market.
And he's really putting his money where his mouth is, cranking up his stake in that S&P 500 ETF by almost 74%. But it's not like he's just buying everything blindly. He's also making some really specific moves inside the tech sector, loading up on NVIDIA and Amazon while cutting back on Alphabet, Uber, and Meta.
So his strategy is this really cool mix of big picture and small picture thinking. Dalio is betting big on the entire forest, the US market, to do well, but he's also walking through that forest and carefully picking the individual trees, the companies that he believes are going to grow the tallest.
So there you have it. Three titans, three completely different game plans. Let's put them head to head now and see exactly where the battle lines are being drawn. It's actually kind of wild when you lay out their top holdings like this. The lack of overlap is just staggering. Buffett is sticking with his tried-and-true blue chips, Soros is going all in on the next wave of tech, and Dalio's just betting on the whole market. They're not just in different lanes, they're driving on completely different highways.
Amazon is the perfect way to see this split. You have three of the sharpest minds in finance looking at the exact same company and coming to three wildly different conclusions. Buffett is cashing out,
Soros is holding it as his #1 position, and Dalio is buying up more. It's a massive disagreement played out with billions of dollars.
And the conflict is even crazier when you look at energy. On one side, you've got Buffett, Mr. Value Investor himself, buying more of an oil giant like Chevron. And on the complete opposite side, you've got Soros, the master speculator, placing a $500 million bet that the entire industry is about to hit a wall.
So with these investing giants on a clear collision course, what does it all mean? What are the big takeaways for us as we head into 2026? Okay, so a few key themes are definitely emerging from these playbooks. First, the days of just blindly buying big tech seem to be over. There's a real debate about their value now. Second, AI is the new high-stakes poker table, and everyone's pushing their chips in. And finally, in a world this uncertain, getting ready for volatility is back in a big way. The so-called smart money is anything but united.
So in the end, we're left with this thrilling cliffhanger for the year ahead. You've got three legends of Wall Street with decades of winning behind them, placing fundamentally opposing bets on where the world is going. They can't all be right. So the only question is, which one of these titans made the winning move?